for like day trades, I like to focus on key time frames so that when I'm going lower into the price action, I don't get lost. You know what I'm saying? Like, cause like, you ever seen a movie Inception? You know what I'm saying? The further they go in, you know what I'm saying, they start to get lost and they can't remember what's real and what's not real. Right. So I like to just focus on key time frames. So what I'm doing here, I'm putting my daily level, right? My daily high and low, right? I'm doing my daily high and low, right? And this kind of like helps my brain work, right? So I got my daily high, my daily low, right? So when come over here, I need to look at yesterday because I keep forgetting that the day has changed over for the ES, right? So my daily high, my daily low, right? And so then I like to focus on like the higher time frame stuff for my day trades, right? So I got my daily high, my daily low is marked out, right? And then now I'm on the 4 hour, right? And looking at the 4 hour, I look at the 4 hour and look inside the daily high and low to see if there's anything I want to mark out, right? And okay, so let me move this over here like that. Okay, that's the last candle from yesterday. So inside the daily high and the daily low, I'm trying to see if there's anything I want to mark out on the 4 hour. So for this day right here, I'm looking at this. I'm like, okay, this had to be some news inside there, the way these wicks are. It don't got to be, but I'm assuming it's news because it wick crazy. So I'm looking inside these wicks to see if it's anything, any PD arrays to the left of these wicks that I want to be concerned with that haven't been dealt with, right? When I see news candles, nothing there on the 4 hour, right? So now I'm looking over here and I see we went up here, like we came down. So we traded through this right here. So technically that's an order block already because we traded down past the body of it. So technically that's an order block already. So that's an order block right there. And we traded back up into it and pushed down. We came up to close to the mean threshold. Still gonna keep it there because it kind of wicked away really fast, right? So I put that on there for right now. So then we're gonna go over to closer to when the market will open up, 2 o'clock, 6 o'clock. Okay, now that order block that we was looking at, boom, boom, boom. You see, it did its job coming into 6 o'clock. So if you trade during the London time, you know, it probably was an opportunity to do something inside there. Maybe not, depending on what setup you're looking for. Now, map everything out for going into, it's 10 o'clock, 9 o'clock right there. Okay. 8 o'clock. Okay. So we getting ready to go into New York trading, right? Boom. Follow me. I'm going to get there. Follow me. Now we got a fair value gap there. We already talked about how we got here. Bearish price action, right? I don't have anything for an hourly fair value gap. Just make that there, right? Bearish price action. How we got here. Now I'm focusing on my time frames, 9 o'clock. So right there, we working on this candle right here because we setting up right before it's time to go. So now we got yesterday's high, yesterday's low there. We're working on this candle right here. So we really don't know if that's a fair value gap, but through the miracle of hindsight, we know it's a fair value gap now because we working on this candle. So we really wouldn't have that marked out, right? But through the beauty of hindsight, we just gonna leave it there because I already put it there and I ain't moving it no more. We got this order block over here that we traded up into and reacted off of, right? Still showing us bullish price action. I mean bearish. I'm sorry. Right? We came in. This hourly order block. And we took out this sell side right here already, and we're continuing to melt down because we making this candle right here. Again, this really wouldn't be there, but through the hindsight, we just gonna leave it there because this really wouldn't be there, right? Since that won't be there, we're not gonna put it there. What we're gonna do, I'm just gonna annotate this breaking structure right there, so we'll know that that's where the 60-minute structure break is, right? That's where the 60-minute structure break is, because we really wouldn't mark that. And then so when we go lower and start looking at the 15-minute, we can figure out what we want to do. So now we got this mark, and what I'm doing, this is how I look at my charts, and this is how I walk through it. Because we talked about when Rhonda said it wasn't a mistake, and so she just entered on the wrong side. We talked about how I try not to get lost, right? So how I try not to get lost when I drop to the lower time frames. So I know I got a daily high, a daily low, a 60-minute order block that we traded up into and rejected off of. Looking at how we got to where we are, the price action has been bearish, because we came over here, right? We came over here looking at this one here. We had a breaking market structure right there, fair value gap to the ups, breaking market structure to the upside, fair value gap retrace. We went up, took out the buy side liquidity after the breaking market structure, and going up, came down, took out the sell side liquidity, breaking market structure to the downside, right? Pushed back up, failed to take out the buy side, right? And started to push back down, right? And it's been constantly going down. We failed to took out the sell side, failed to take out the buy side, and have been moving down, right? We retraced back up into a premium order block and then sold off, right? So it's bearish activity that got us here. So right now the bias is bearish, because bearish activity got us here, and we're still pushing bearish because we still working on this candle here. We got another breaking market structure to the downside. So we broke market to the downside, came to a premium PD array up here, revisited this fair value gap after the news candle wick through. We came back to this fair value gap in the premium, right? Came back down, set another order block in the premium, and then we sold off with another breaking market structure to the downside. So the price action is bearish that got us to right here, right? These are my my daily levels and my 1 hour levels that I'm watching. Don't have any 4 hour levels because we didn't have anything that hadn't been traded to up until this point. So now when I get down to the 15-minute at, let's go over here to the 9 o'clock. That's 9:30. So when I get down to the 15-minute, you know what I'm saying, at 9 o'clock, we'll just go 9:15. When I get down to the 15-minute now, I know I need to be looking bearish, right? Just like I said today, it looks like all eyes are on the sell side. You know what I'm saying? I just said that just from a quick peek at the price action without sitting down analyzing it like I just did, right? I didn't get an opportunity to analyze it like I just did. But when you get the time to sit down and analyze the price action, this is how little Timmy Rogers decides which way I need to be looking for the draw on liquidity, right? And so when I come in here now, I know this was an hourly breaking market structure right here, right? We had an hourly breaking market structure right here. And then now that we get down to the 15-minute, I see we got a 15-minute breaking market structure with a 15-minute fair value gap right here next to, you know what I'm saying, this hourly order block that we sold, that we reacted off of, right? Since we already reacted off of that order block, right, I'm gonna move it out my way. I don't need it there no more because we reacted off of it. It was a premium PD array that we reacted off of, and we sold back down into the discount, right? So now, boom. And then as you see, we continue to slide, right? Sometimes it don't come back for you, and we continue to slide. Okay, it didn't come back for me, right? It was a lot more bearish than I thought, right? Because once we got that breaking market structure right here, right? We came down, we consolidated a little bit and then broke off heavy, right? I ain't gonna hold you. This fair value gap, this order block, none of that would have been my entry. My entry would have been at least this fair value gap right here at this break-in market structure. We never got back there, right? Sloppy price action. At least would have been there. This would have been my preferred entry right here. This would have been the one Lil Timmy Rogers looking to, you know what I'm saying, get picked up on. But at least here, back to this break-in market structure, we never got there. But let's move forward. Keep moving forward, right? We consolidate in here now. Now that we consolidate in here, this is really chop slop. Once we get out of the lunchtime, remember, this is yesterday's low right here. This is yesterday's low. We just chopping around yesterday's low, right? We get a nice move here, right? We get a nice move here. We're in the liquidity pool. We get a break in market structure to the upside, right? We get a break in market structure to the upside. Now, if you're not the type to trade against the grain, meaning today is a bearish day and you only looking for reasons to sell, you wouldn't pay this setup no attention, because this is going against the grain. This is a more high risk trade right here. This is a more high risk trade because you've had a bearish day all day. We're consolidating. We dropped hard, consolidating right here near lows, near, you know what I'm saying, probably another day's low. We just took out these lows and we're consolidating under the lows. So this is looking real heavy and bearish, right? Ignoring this setup right here wouldn't be nothing wrong with that. But this is a bullish setup right here. This is a bullish setup right here, right? But look, it only gave you from this to that before it reversed. You see what I'm saying? It only gave you this to that before it reversed. Like I say, this was a bullish setup. This could have been good for a quick scalp, right? And that's why I say when you're doing same days, sometimes we get into trades where we want them to continue to run, but that's not what the algos want. That's not what the algos been given. We've been consolidating and we want them to continue to run. And sometimes it's better to sit on your hands. But this is how I try not to get lost in the sauce, by having my higher time frames annotated, right? Because when you get out, let's go down to 5 minutes, right? When you get down to 5 minutes, right? I like to have my calendars where I can see them, right? I like to have my calendars where I can see it like this right here, right? Just looking at these calendars right here. And can you imagine looking at this chart right here and, you know what I'm saying, seeing us come down here, see us take out this sell side liquidity and we chopping, and then we get this big move right here, right? We get this big move right here. You're like, okay, we in the liquidity pool. You know what I'm saying? We took out short-term sell side again while we in the liquidity pool, and then we get a mean takeoff like this right here, right? We on the 5 minute. So in this zoomed in area, you thinking, man, we about to get us an afternoon rally. You know what I'm saying? We pull back to this liquidity run reversal and we go long right here. We thinking we fun to get us a rally. But when we zoom out and look at the higher time frames, right, we never even made it back to the breaking structure yet. So we can probably only go up to there if we get there and then drop. You know what I'm saying? If we get there and then drop. Now, on the flip side, if today is a bearish day and we thinking, okay, everything we dumping, I want to sell. I want to take a short whenever I see a short opportunity. You know what I'm saying? Whenever I see a short opportunity, I want to take a short, right? Let's come to 9:30, right? When the market open, when we can start buying options and really trading for real for most people who gonna try to trade, because a lot of people don't wake up early in the morning trying to trade what's the name. So it's everything bearish. You know what I'm saying? And looking at these 5 minute candles, imagine seeing these 5 minute candles without any annotations, right? Imagine seeing these 5 minute candles without any annotation, right? So We like, hey man, like, you know what I'm saying? I wanna short this thing and just get paid. So we come in here, right? What time was the news coming out today? 8:45, and then 8:30. We had any other news today? Nope, 8:45, 8:30. So boom. So when the market open up, right? The market tanking, right? You look for a reason to sell, right? You look for a reason to sell. It's tanking, right? No fair value gap here. Fair value gap right there, right? Fair value gap right there, right? So the market tanking, we go down, we come back up, we see this fair value gap. We gonna short it at this fair value gap. Nah, wait a minute. Does that fair value gap fall into lines with what your trading model say? Not little Timmy Rogers. That's not my trading model. But if you just gonna short every gap you see, you try to short this gap, boom, you get your head bust in. Now you're frustrated, right? Okay, you ignoring this, you ignored this one right here, right? You ignored this one. So you looking, let's just say you trade order blocks, right? Let's say you trade order blocks, right? You want to short on order blocks, right? So boom, you come here, you take it off. As soon as you hit this order block right here, you take it off the middle, or even if you take it off the mean threshold right there, right? Take it off the touch, or you take it off the mean threshold, right? You put it above at the high up here. Oh, I got stopped out, right? I got stopped out. And you like, man, what's going on? Why am I getting stopped out, right? It should be moving right now. But remember, we're zoomed in to 5 minutes. That's why I keep my higher time frame information on the chart, knowing we just took out sell side, right? Anytime we take out sell side, I'm anticipating the market to go back to at least equilibrium, right? I'm looking for it to go back to at least equilibrium, right? And so we took out sell side right here, right? We took out sell side right there. And then this move started way up here, right? Actually up here where this move started right there. We came up and we started selling off, and then we came down and took out sell side. So that move started all the way up there, right? And we came down and we took out sell side, right? I need price to get at least back to right here at this consolidation before, you know what I'm saying, I start looking to jump back into anything going short. You know what I'm saying? Personally, I need to see it come back. Y'all know how y'all always hear me say, oh, I needed to come back to so-and-so before I look to participate in the short because we done went so far so fast, right? Right. Hopefully I was able to explain that in detail on how I try not to get lost, because I done got lost in the sauce plenty of times. And especially if you're dealing with like options, the same day premiums be moving so fast. The way we've been consolidating for the last 14, 15 days, it's just really not good price action for same day options. You got to be in and out very quickly. You got to be spot on with your entry, spot on with your direction, and you got to be in and out very quickly. But looking at this right here, hopefully you can see what I'm talking about, where it's easy to get lost in the sauce of on the lower time frame of, okay, we getting ready to make this move. But in the higher time frame, when you go back to an hour, right, you go back and look at the hourly, you see we just down here consolidating, right? We just chopping back and forth, Christmas tree trading. You know what I'm saying? We sold off, then red, green, 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 red, green, green. You know what I'm saying? We just Christmas tree trading.